Your bank charged you $175 because you bought a coffee. Not because you're bad with money, because your bank reordered your purchases without telling you. Here's what actually happened. On Monday, you had $62 in your checking account. You bought coffee for $4. You grabbed lunch for $12. You paid for parking, $3. You bought groceries for $30. Then your gym membership hit for $49. You thought you'd go over by maybe $6 on that last one. One overdraft fee. Annoying, but survivable. Wednesday morning, you open your app and see 5 overdraft charges. $175. 5 times $35. For the same $62. Your bank didn't process your transactions in the order they happened. They processed the gym membership first. The $49 charge, that cleared. Left you with $13. Then they ran the $30 grocery charge. Overdraft. Then the $12 lunch. Overdraft. Then the $4 coffee. Overdraft. Then the $3 parking. Overdraft. They took your 5 purchases and rearranged them from largest to smallest, specifically to maximize the number of times you went negative. This isn't a glitch. It's called high-to-low reordering, and until 2009, it was the default at pretty much every major bank in America. Wells Fargo paid a bank reorder settlement of $203 million over this exact practice. Bank of America settled for $410 million. Chase paid hundreds of millions. Not because they broke the law. Because what they were doing was technically legal, just so obviously predatory that judges let class action suits go forward anyway. The dirty truth is, overdraft fees are a profit center built on a lie. The lie is that they cost the bank something. That $35 is covering the bank's risk when they spot you money you don't have, but banks don't spot you money. When you overdraft, one of 2 things happens. Either the transaction just declines, which costs the bank exactly nothing, or the bank decides to let it go through and then charges you for the privilege. That charge has no relationship to the bank's actual cost. Processing a $3 overdraft costs a bank the same as processing a $3 normal debit. Functionally zero. The $35 fee exists purely because you're now a captive customer in a moment of crisis and they can extract it. Here's how much banks make on this. In 2023, American banks collected $9 billion in overdraft fees. That's billion with a B, $9,000 million. For context, that's more than the entire revenue of Spotify. It's close to what Airbnb makes in a year. Except Spotify provides music licensing and servers and engineers. Banks provide a permission slip to spend $3 you don't have, then charge you $35 for it. 63% of overdraft fees are paid by people who overdraft more than 10 times a year. The Consumer Financial Protection Bureau calls them frequent overdrafters. But that's a sanitized term for what's actually happening. These are people living paycheck to paycheck who get trapped in a loop. You overdraft, pay the fee, now you're $35 shorter for next month's bills, so you overdraft again. And here's what makes the reordering thing so vicious. It doesn't just hit you once, it resets your baseline. Let's go back to that Monday. You thought you had $62 to work with. Under normal ordering, first in first out like a rational human would expect, you'd have paid for coffee, lunch, parking, groceries, then overdrafted once on the gym charge. Annoying. $35? You'd have 57 fewer dollars going into next week. You could adjust. But under high to low reordering, you paid $175. Now you're starting next week $140 deeper in the hole than you thought. That $140 swing isn't just painful now. It makes you more likely to overdraft again next month because your mental model of what you have is wrong. The bank has created a debt spiral out of 5 normal purchases. The craziest part is that some of those charges might not have even been final yet. Pending transactions show up in your account sometimes a full day before they actually clear. Banks use their discretion about when to count those against your balance. If it maximized fees, pending meant pending. If it helped you, pending meant processed. You had no way to know which bucket your money was in at any given moment. Some banks played even dirtier. They'd hold deposits longer than withdrawals. You mobile deposit your paycheck Friday morning. The deposit shows as pending. You buy groceries Friday afternoon. The bank processes the grocery charge immediately and the deposit 3 business days later. Overdraft. Even though in reality the money was there first, the bank just chose not to recognize it yet. This is why your parents or grandparents might have told you to keep a check register. That little booklet where you manually write down every transaction and subtract it yourself. Because they lived through an era where you could not trust the number the bank showed you. It wasn't real. It was a number optimized for fee extraction. Courts have mostly killed high-to-low reordering now. The settlements were too expensive and the PR too bad. Most banks switched to processing transactions in chronological order, or at least they claim to. But the overdraft fee itself is still $35 most places. Some banks dropped it to $30 or $25 after regulatory pressure. A few went to $0 as a marketing move. But the bulk of the industry still charges you a day's wages because you miscalculated by $3. And even without reordering, there are newer traps. Some banks offer overdraft protection, which sounds helpful until you realize it's just linking your checking account to your savings or a line of credit. If you overdraft checking, they auto-transfer from savings to cover it. Sounds good. Except they charge you a transfer fee, usually $10 or $12. Not as bad as $35, true. But here's the thing. They only market this to people who've already overdrafted. It's a solution to a problem they created, sold back to you at a discount. Or they'll have tiered overdraft limits. We'll cover you up to $50 of overdrafts with no fee. Generous, right? Until you read the fine print. That's $50 total buffer, not per transaction, and it resets monthly. So if you overdraft by $20 on the 3rd of the month, you only have $30 of buffer left for the next 27 days. One surprise charge and you're back in FE territory. The reason banks can get away with this is that checking accounts are sticky. Switching banks is a nightmare. You've got direct deposit, auto pays for 6 different bills, maybe a debit card saved in a dozen apps. Moving all that to a new bank takes hours and you'll definitely forget something. Banks know this. They know that even if you're furious about a $175 fee bombing, you probably won't leave. You'll complain, maybe they'll refund one fee as a courtesy, and you'll stay. Regulators have tried to step in. The CFPB has pushed banks to be clearer about overdraft policies. Some states banned certain reordering practices specifically, but there's no federal law that says overdraft fees must be proportional to harm. No cap on the amount. $35 is just the industry standard because everyone clustered around the same number and nobody wants to break ranks and go lower unless forced. Credit unions tend to be better about this. A lot of them charge $20 for overdrafts or have lower thresholds before fees kick in. Some will just decline the transaction for free. But credit unions also tend to have clunkier apps and fewer ATMs. So there's a convenience trade-off that keeps people at the big banks. Here's what you can actually do. First, opt out of overdraft coverage entirely. This is a real thing. Banks are required to let you opt out. If you do, any debit card transaction that would overdraft your account just gets declined instead. No fee. The transaction doesn't go through, but you don't get charged. You can usually do this in your app settings or by calling customer service. The catch is, this only works for debit card purchases. It doesn't cover checks or automatic bill pays. Those can still overdraft you. But if your overdrafts are mostly from swiping your card for small stuff, opting out kills most of the problem. Second, set up low balance alerts. Most banks let you get a text or email when your balance drops below a number you choose. Set it at like $100. That gives you a warning before you're in danger territory. Won't stop all overdrafts, but it helps you see the edge before you cross it. Third, if you do overdraft, call and ask them to reverse the fee. Especially if it's your first time or you've been a customer for years. They'll often do it once as a courtesy. Be polite but firm. You're not asking for a favor, you're asking them to reverse a fee on a $3 coffee. Frame it that way. Fourth, if you're overdrafting regularly, it's worth considering a bank that specifically killed overdraft fees. Chime, Ally, Capital One 360 Checking. They've dropped fees entirely as a differentiator. Yeah, you have to move your direct deposit and bill pays, but If you're paying 100 plus in overdraft fees every couple months, the math works. Or keep a buffer in your account that you pretend doesn't exist. Mentally, your zero is actually $100. This only works if you have enough income to build that buffer in the first place, which not everyone does. But if you can swing it, it's a free insurance policy against your own math errors. The thing nobody tells you is that overdrafts aren't a personal failing. They're a system design choice. Banks could decline transactions for free. They could process in chronological order and always have. They could charge $2 instead of $35. They don't, because $9 billion a year says they don't have to. That coffee didn't cost you $175 because you're irresponsible. It cost that much because your bank decided that 5 overdrafts were more profitable than one, and reordered your life to make it happen. If that makes you angry, subscribe. We explain the systems built to take your money every week,